you go.
Welcome, everybody, to the Chinchilla Pickin' Podcast. It is August the 3rd, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am here with Brandon Beaver. Brandon, is there a plethora of news tonight or what?
Yeah, plethora of news, lots of earnings that have happened since the last time we had this podcast. Lots of economic news. We are now officially in a recession. Yeah, right. Officially in a recession. That's what we would call it. But they changed definitions of things, right? We haven't had a depression since the Great Depression, right? Because that word no longer exists in economics. That's the only reason why we haven't had a depression since 1929 is because the word just no longer exists.
Yeah, and you know, I have some arguments as to other people's arguments as to why they say we're not in a recession. You know, we've talked about it here on the podcast. They've talked about labor market, and I say, hey, people are they're just finally settling for jobs they wouldn't have settled for 4 or 5 months ago. That's why the labor statistics look as rosy as they do, dovish. But in reality, it's just people settling for lower paying jobs.
We're not out of the woods yet, Dave.
Right. Anyways,
we're not out of the woods.
We are, yeah. Okay, Taylor Swift. Are we out of the woods yet? It's a hot day. It's a good day. There's a lot of economic news. I know you want to get into it. I want to get into it. So what do you say we just get into the rules? Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We actually do not discuss it. You hear the live discussion here on the show. There's actually a couple things I'm going to bring up to Brandon live here in front of you, so you get to see and hear his reactions now that we're streaming on YouTube as well. It would be fun to see, but let's. What do you say we get started, man, and get into this? Don't forget, if you like what you hear and you like what you see, hit the subscribe button. Go ahead and follow us. That's how we get the organic growth. That's how other people also get to enjoy us and see and listen to what we have to say. Thank you for doing that, and thank you for listening as always. Brandon, do you mind if I lead off a couple things?
Yeah, that's probably better because I think what you have kind of leads into what I have too. So,
all right. So I'm gonna start off with I got a couple different angles I want to go here with this. I'll start off with one that's gonna take just a couple minutes of our time, but it's one I want to get out of the way with right away. And this is oil. Brandon knows where I'm going to go with this. I'm going to talk about oil again because it's Wednesday, and guess what comes out on Wednesdays? The EIA Petroleum Status Report. So as I look at this report here, I see that, yes, the crude oil inventories went up 4.5 million barrels. That made the energy markets move negative today, and crude dropped in price. Last week, Brandon, I don't know if you were aware, but crude oil inventories were down 4.5 million barrels. That's literally a wash. Gasoline inventories last week were down 3.3 million barrels. This week they're up, but only 0.2 million barrels. And distillate inventories have been down 2 weeks in a row. I don't see that as a reason to go ahead and have and be selling off on oil. Do you?
No.
Here's some other news. OPEC is now OPEC Plus. I don't know if we're going to get more letters with that now or not, but OPEC Plus has said that they're going to go ahead and increase a small output to help with the cost of oil. And oil is down and was down below 100. I see it staying around 100 or more for the near-term future, just because of geopolitical events such as Ukraine, Russia, that still exist. The embargoes on Russia that still exist. These are not things that are going away. Brandon, your thoughts real quick?
And China is going to come back online too. They're still dealing with the COVID lockdowns. So it's one of the reasons why you're seeing prices of oil so low, but that can only last for so long.
That goes into, China lockdowns opens a whole door of conversations you can have based off of that. Supply chain issues, what companies are saying on the earnings report. Hey, we're having supply chain issues. Lucid Cars, they can't make cars. Why? Because they don't have chips because of supply chain issues. But nonetheless, I'm going to stick with oil right now. off the drop today would be a good time to maybe look at some strong companies, because I believe in the short term they'll bounce back up. Long term, eventually oil will come down to a more reasonable level, but not until those supply chain issues get resolved. China's back online, and Ukraine, Russia has been worked out. Once those happen, those two things, which is China opens back up, Ukraine, Russia gets worked out, that's when we get oil back at a normal price. Right now, it's not; those two things are not happening, and I see short term that the oil companies are going to bounce right back off of this.
Not even close. It's not even close to happening. Ukraine, Russia is not even close to over. And Russia has 10% of the world's oil. They produce 10% of the world's oil.
I mean, yeah, exactly.
Downward price pressure in oil right now. That's speculation.
That it is 100% speculation. I believe it's speculation in the wrong way. I believe they're going off a report that consistently goes up and down, up and down. If this was a stock, I would channel it and I would make a ton of money, because it consistently, look at the EIA petroleum report. If you're listening right now and you have no idea what I'm talking about, you could find this report. If you have Fidelity, if you have a Fidelity account, you go on Fidelity, you go into markets and sectors, and then you go on to activities calendar, and you're going to find a whole list of different ones. You can pull up the EIA petroleum status report for Wednesdays. It's on every single Wednesday, and you can look at this chart, and you tell me if that chart does not just go up and down, stay right in that channel, and it's always right. It's always right there. And so next week, that means that it could go down. I'm looking for 3 weeks in a row.
Can you share your screen right now, just so when we put this up on YouTube, people can see what you're talking about? Do you have it up right now?
Yeah, I could get it up here. Hold on 1 second. Actually, no, I don't have it up anymore. I just closed it. I literally just closed it.
We can share the link if needed.
There you go. We'll share the link.
If I was a commodities trader, I'd probably buy WTI right now.
Right, it would be a good opportunity to get in and make some quick turnaround on your money there. I think it's too early for us saying, hey, oil is coming back down to normal. No, it's too many things still out there. Too many things.
And everybody kind of sees that as the rollover inflation. Everybody kind of sees that as a good catalyst for tech and everything. But no, we're not anywhere near out of the woods. The market has rallied quite a bit in the past month. Let's see where the S&P 500.
I mean, I took profits recently. I've taken a lot of profits this past 2 days, and I made a lot of money, and I'm very happy with it. But I took the profits because I see it like we said last week. I see the market going back down again for in the short term, and so I'm taking profits now so I can reinvest and buy lower.
So in the past 4 weeks, the S&P 500, or the SPY, at least the SPY that tracks S&P 500, rallied 10.15%. Market conditions have not changed.
Yep.
Now, back then, I was saying to buy SPY. I bought SPY at 367 because we were pricing in the apocalypse, which I don't think that we're there. But the market likes to see, swing. It's a pendulum that goes from one extreme to the next. And now we're acting like we've turned the corner and inflation has peaked. There's some evidence for that, but it is not anywhere near conclusive. And let me tell you something. If you think inflation sucks, wait till the other end of this when deflation kicks in. The short term is going to be worse.
I mean, there's that as well. But I mean, we shouldn't really be cheering. I mean, we could cheer if inflation drops down to 8%. But I mean, why are we cheering 8% inflation? That's ridiculous.
Yeah.
Inflation needs to be down around 2 or 3.
Yeah.
I mean, so
historically, stocks underperform greatly when inflation is above 7%.
Right.
These kind of rallies happen though when you're still in a bear market. I think during the bull market, or not bull market, but during the bear market that was created by the .com crash. At one point in time, over a course of a few months, the S&P 500 rallied about 25%. So it's not surprising. It's just I don't chase the dragon. You say it all the time, Dave. Don't chase the dragon.
Right? Is it a bear trap? That's the question.
Bull trap. It would be a bull
Bull
trap.
trap.
But
Yeah. Bull trap. My bad. Sorry, bear bulls. Yeah.
yeah.
We all make money. Um, I told you that want to be a quick one. Just take a few minutes. I want to move into the next one I have for you, Brandon. Is there trouble in the air? Is what I'm calling this. This another next 5 minute section. I know we're heading. If you're listening right now, we don't usually hit a bunch of topics all at once, but there was so much news over the past week that there's a lot we want to cover. So I'm trying to be quick with it, but also cover everything about these that we want to. If you have any follow-up questions, if you're listening on Good Pods, you can send us a question. If you want to DM us on Instagram, send us that. YouTube, send us that question. We're everywhere. Just DM us somehow, and we will get back to you as soon as we can. Just keep in mind, there's only 2 of us. We don't have a team here, so we'll get back to you as soon as we can. So, is there trouble in the air, Brandon? I'm talking about Airbus and how they are axing a deal with Qatar. Qatar is it Qatar Airways? So. And it's the A350 deal, right? So Qatar Airways started this whole things, and they were suing Airbus. This is in 2015. They started having they started introducing the Airbus 350 into the skies, right? Now they're suing them for 1.4 billion after half of its fleet was grounded over regulators over premature surface damage. Well, they're now refusing to take delivery. So just Airbus went ahead and just axed the deal and said, well, we're no longer going to be building airplanes for you. You would say, okay, it's just the 350s, right? No. Airbus also had a deal with them for the A321 Neo jets. That's 50 smaller jets that they also revoked on this contract. And they did that because they needed those jets for the upcoming World Cup to transfer teams around. So Airbus and Qatar Airways are here having a fight in the public sector saying, hey, you guys, Qatar is saying, hey, Airbus, you're making faulty planes, aren't safe. Airbus is saying the planes are safe. They're meeting up the code. They're doing everything they need to do. Qatar is refusing to buy any of these planes anymore. Airbus is just saying, we're just going to quit making for you. We're talking about billions of dollars of revenue now lost for Airbus. And I had not seen the stock react. So my question is, with this news headline today of them revoking the deal completely with Qatar Airways, why isn't Boeing moving higher, and why is Airbus not dropping?
That's a good question. There's a lot of speculation in travel right now because there's a lot of demand for it. But, I really don't think the demand's going to stay. I don't think it's sticky demand. This is all pent-up demand over the course of, the pandemic that lasted for close to 2 years. Some say we're still in it, but whatever. And most of the world, or not most of the world, but much of the world is still in the pandemic. But this is pent-up demand. It's kind of slingshotted. It's not going to last. So, yeah, a lot of these companies like Boeing got beaten down probably more than they should have. Airbus was the same. Delta Airlines, American Airlines, all of them got beat down more than they should have. But there's going to be another return to normal, and this is going to be a pendulum back down, to normalization. Now we're above normalization. Now we've got probably too much demand in travel that's not going to last.
All right, so I get what you're saying there, right? And I
understand.
understand.
I think what they're doing, what people who are buying Airbus still and holding that price up, they're thinking that the consumer is going to make up for the losses that Airbus has had.
But they haven't seen that losses. Airbus, so usually Boeing and Airbus, how much revenue they're going to make years out because they sign these deals 2 years, 3 years in advance, right?
Yeah.
So now Airbus, which they're down 20% this year totally, but compared to the overall market, they should be down more. But recently they are up. Now, if Airbus is canceling all these deals and Qatar Airways is saying they're canceling all these deals and it's a safety issue, when you think other airlines are going to start looking at their Airbuses and say, hey, that might be a safety issue we want to look at as well. Remember what happened with Boeing? What was it? The Dreamliner? And
Yep.
they had all those safety issues there with them smoking. They smoke filling the cabin, and look what it did to Boeing's stock. And I'm just saying, why is Airbus not seeing the same effect? That's my question, and I don't have an answer. I don't have an answer.
And they're cutting their delivery targets too because of supply chain issues, which we thought we'd be over by now.
Now with China shut down, it's not. So I mean, there's too many headwinds for Airbus. I believe the stock should be lower. I mean, this is one that I would say, if I could buy a put, I probably would, just because it deserves to be lower. But that's up to the other investors to make that happen. If they see the same thing I see when I look at these, when I look at the headlines, and I see the headwinds, the supply chain, the fact that other companies might be saying, "Hey, we need to look at our Airbuses, see if we had the same safety issue," because Qatar's going public with this information. We probably need to look at it too, so people feel safe.
Yeah, for sure. Yeah, that's
I would not buy Airbus at this moment.
Okay, but then do you buy Boeing? Because Boeing's been just as bad.
Yeah, but currently they have no issues right now, and currently airlines, because of the whole pandemic, they got rid of all these older airplanes because they didn't need as many during that time. But now they're starting to purchase more new ones, so now they're going to be getting newer airplanes in.
We found out
Boeing would be attractive.
Well, see, here's my problem with Boeing. We found out about their latest issue through a trade magazine. That was investigative. Trade magazine.
Yes, I remember that. Okay.
It wasn't a warning from the CEO. It wasn't a warning from the board. It wasn't a, hey, this is a problem that investors may care about. It was a trade magazine that uncovered it.
Okay, I mean, you're right. You're right.
I don't know if I trust Boeing either. So maybe you just stay away from both of them because it's too many unknowns.
There is too many unknowns, but there's going to be a lot of new orders because the airlines do have to revamp. So where do you go if you don't go to Boeing or Airbus?
Yeah, you're going to have to go. Yeah.
I
traveled on the 737. It was like the most comfortable flight I've ever had in my life. And it was a 737 Air Max, and it was like the most comfortable, like smooth flight I've ever had. So I will say that about Boeing.
I was recently on the Dreamliner, and it was like smooth, like you didn't even know you were flying, man. It was perfect. It was nice. So, yeah, got nothing to say about the airplanes. All right, Brandon. Next one, I want to, because I know how you feel about GameStop, right? I know your feelings on GameStop, and I know how it really affected you. So I want to bring something to your attention you may not be aware of. So there was this company that went IPO'd, and it was AMTD Digital Inc.
I know about it.
HKD is the ticker. HKD is the ticker. So it IPO'd at $7.80, and it went as high as I believe it was $1,600 per share recently because of, again, the Reddit crowd and the GameStop crowd and the meme stock crowd. And the company went on record and said that nothing has changed with the fundamentals of business. There has been no news, no investment news. We have not released anything that would cause this stock to go up. This is what the company said, and it's because I believe they're trying to cover themselves from a liable issue. So they've come out and said that we have not released anything to say why this is going up the way it is. We have no control over it. This is just the stock market moving the way it does. That company is worth more than 30% of the S&P. I believe it was, I read somewhere, or maybe I'm reading that wrong, or maybe it's worth more than 300. It's worth more than 300 companies in the S&P. That's what it was. And now because of the stock price, and there's no way that this company is worth that, but there's still no way that GameStop's worth what its stock's worth, and it still hasn't dropped. So what do you say to another meme stock, just lightning rod shot up out of nowhere on this, up 23,000% return if you would have invested back when it IPO'd?
There's no limit to the stupidity in the market. There's none. Well, one of the reasons why I say we're not out of the market or not out of the woods yet with the market is because these people still exist. They're going to be flushed out at some point. GameStop will be flushed out at some point. Did you see what happened to Liberty TripAdvisor the other day?
No, I missed that one.
Class A got notified that they're going to be delisted from NASDAQ. So Class B rocketed like 500%.
Wow. It's
Yeah.
these crazy moves. Here's the trouble with these moves, Brandon, is that Joe on the street who has saved up $1,000, has in his Robinhood or Webull account or one of those what have you accounts. He's looking at this going, hey, if I could put $1,000 in one of these before they pop up, I can make this amount of money. And, and he's taking $1,000 that he needs to pay rent next month. And it's not money that he can go without. And he puts it in these because he buys it because he thinks it's going to continue to go higher but he wasn't there at the beginning. He's what we call chasing the dragon, and he loses money because it drops back down. And now that guy can't pay rent next month because of it.
Yep. The average Robinhood user in the past quarter lost 38%.
I mean, it was here on the show that someone said that 80 some odd percent of all retail investors. I got to get that quote and put it on a shirt for you. We'll lose money in 2022, and that was Brandon Beaver. He said that back in January.
A lot of them lose all their money, every bit of it, because it's options. That's what they're playing. That's what a lot of them are playing, are options, because they want to hit that lottery ticket. And that makes it on an option that they play on. Long shots hardly ever happen. So,
I mean, so someone made money off of that when they bought the IPO, and it's shot up now and been pushed and moved. But I don't believe that. I believe the people who bought the IPO at the IPO actually believed in the company, probably worked for the company, and then they're just very happy that other people ran the stock up for them.
Yeah, for sure. It's and who knows how many of those are retail.
Right.
Institutions probably made a lot of money off of it. But yeah, no, there's no limit to the ignorance here. I'd say short it, but who knows how long it's going to last. You never know.
I thought about shorting it today when it was opening up at 1,300. I couldn't play options on it to short it, so I thought about just go ahead and put a sell in at that price. I'm buying when it dropped lower, and it did drop a lot lower. It went down to almost 700, 600, and then right back up to 1,100 at the close. It was a crazy swing, hundreds of dollars a share swing, going up and down all day, just like we saw with GameStop back in the day.
Unbelievable.
Right. All right. Moving on, the next topic is going to transition.
I do want to say this. I still might buy that put on GameStop. Long out 2024, probably a January put. There's a lot of companies that I said that were going to have a lot of trouble this year, and it turns out I was right. So maybe I just need to start putting my money where my mouth is. I hardly ever buy long puts, but
I think that one's a safe one. GameStop has quarter over quarter gotten worse, bigger loss every single quarter. I would like to see him reverse that trend. I'm a gamer, but at the same point in time, it's like, the company's not making any money, and I don't see them turning that around anytime soon.
Another one it's up 24.12% for the month. It's but they make those puts cheaper. So if you go long enough that you can, maybe increase your odds that it'll finally come back down to earth where it should be. And if those puts become cheaper and cheaper, maybe you just add to them.
There you go. All right, let's go into the next topic. It's going to transition into your topic. We kind of blend on this next one. I'll lead with my statement here. It's kind of a very argumentative statement, and then you could take it from there. Today, one of many Fed officials, came out on record and said that they look at next month as starting at a 50 basis points reduction, and that they're going to use inflation as a guide. Well, when people heard that hey, the Fed said that they're going to come out and start at 50 basis. Well, the Fed didn't say that. One of the members of the Fed came out and publicly said that. Nobody else publicly said that. And that they said they were going to use inflation as a guide. and that's one of the reasons why we're moving market today, is because one person said that they think they're going to start off at that point. I mean, come on, if that's not speculation on speculation on speculation, then I don't know what is.
The buy the dip mentality still exists. For a new bull market to begin, the buy the dip mentality has to die first, and we have to have more capitulation, and then we can start to see a recovery. I don't think, nothing's changed in the past month. We have a few things like, more discounts on technology and stuff like that, but the supply chain's just as bad as it was a month ago. Inflation's just as bad as it was a month ago.
Worse. Inflation's worse.
Oil prices have came down, but why? Like I said, it's because of speculation, I think. So nothing's really changed as on the macroeconomic front. Except worse off. We're worse off now. When you talk about like the past 10 or 15, 20 years, we're worse off now as far as economic awareness and education goes. By far.
Yes, economic awareness and education, economic understanding of how the economy works and everything is we are people are learning how the economy works from headlines instead of actually reading and studying and understanding. And that's not the way you learn how economy works. Everybody likes to in America right now, we're politically divided, and a lot of people like to rag on the other side and say, oh, they're just listening to headlines. They just listen to headlines. For right now, a lot of you guys are just listening to headlines on the economy on all sides, and nobody's actually understanding. Nobody is actually has a nice long history and experience and education in economics, and is actually coming forward and talking, and then that's the problem. And so people are just, they think they know the economy based off this and that, and that's not how it works, man. That's not how it works. But I wish you luck. I hope you make money, because you know what, as at Chinchilla Picking, we want everyone to make money. So I'm happy if you do, but like, you're sending the wrong message.
Paul Krugman said that the problem is the economy is still too good.
And that's so here's my point. Here's my point, right? So this Fed official says they're only going to do a 50 basis point. Well, they can't just do a 50 basis point if the economy is too good. The purpose of raising rates is to slow down the economy so that the inflation can come down. If the economy is booming, that means inflation next month, when we report it, it's going to be even higher than 9.1%, which is what it was last month, which means that the Fed needs to start off at a 100 basis point and not a 50 basis point.
It's a widely held misconception, though, that inflation being at 9.2% means the economy is great. What it means when you have hyperinflation mixed in with a recession, that is what we have right now. Those are two things that should not go together. The only reason they go together is because you've had fundamental policy errors and way too much spending. That's the only way it happened. It's how it happened in the 70s. It's how it happened now.
So let's bring this back here to investing. So if we were looking at this and we see the market move today based off that news and the news of oil inventories being higher, and we know this is all speculation, and I have a very good gut feeling that this Fed news is just speculation on speculation on speculation, someone trying to feed good news into the market, then that tells me that we're going to see another drop. So I was right to take my profits off the moves today. And then now I have that cash ready to go and invest when we do have another dip down. I'm ready to go back in and really find some good quality value companies at a discount.
Exactly. We had a tradable bottom, which happens. That's what happens in bear markets. You had a tradable bottom just a few weeks ago. And if you bought in and you did some, really good, if you got good prices, you could probably still hold it and be just fine at the other end of this. But maybe you take some of the profits away and wait for better deals to come again, because I think they're coming.
Do you think now? Who do you think? Do you think we test the lows again, or do you think we've hit the lowest? We've come up a little bit, and our new floor is a little bit higher than our old floor.
Hard to tell. It's really hard to tell. We've never had this kind of inflation and had a soft landing before. So if we follow historical trends and either you have sustained high inflation that doesn't go away, then we're going to move sideways for the next 10 years. Or if we follow historical trends and have a hard crash, then you're going to have a floor that's lower than what we had before. Either way, it's not good news for the stock market. And I hate to be doom and gloom, considering
You are doom and gloom right now.
2 months ago, I was positive, but that was because I thought we swang too low on things that didn't seem to be happening yet. But when I hear that the president's 2023 budget, I'm not trying to be political. I want to relate this back to the 1970s, because the 1970s inflation was driven by a highly regulated supply and broken supply chain. And it was driven by post-World War II government spending. Most of it actually came from the bread and butter spending of not bread and butter, guns and butter spending of LBJ. It was defense spending in the Vietnam War, and it was the war on poverty that never ended poverty. But those things, the government spending on those things that didn't really work, those drove the inflation of the 1970s.